Sterling, good morning to you. It's great to have you. So there's a question. What will come out on the other side, but when are we going to see that other side? Where are you on tech valuations at the moment with the NASDAQ 100 earnings multiple below its 10-year average? Yes, it's looking cheaper. Is it cheap?
Yeah, I think relative to the fundamentals, at least in software, it is. So we look at valuation across the last 22 years. So we start January 1st of 2000 all the way through to today. And really where software sits is just above that 22-year average. But the fundamentals in software are a lot better than they were in 2005, 2007. I mean, you have free cash flow margins that are 700 basis points higher today than what they were. Business models have a lot more visibility, a lot more stability than what we've seen in the past. And you're talking about an industry that over the last 10 years has shown the best growth across the economy 4 times. And we still think it's going to be a top 5 grower moving forward. So coming out the other side, yeah, we think the valuations are cheap. You don't have to buy everything today, but we think it's time to start averaging back into software.
Okay, and Sterling, I want to get to some of the names that you initiated coverage on Microsoft. It's one that we spoke about at the beginning of the show, down 17% over the last month. Are there cracks in this story? You rated it market perform. You had to take into account Forex, the macro, PC market. Where are you on this name, and what does that tell us about the broader market?
Yeah, there's a lot of moving parts when it comes to Microsoft, and there's a lot of good. You know, you pointed to a couple of them, but the shift to the cloud and what they've done with Azure, what they're doing actually in cybersecurity, I think is underrepresented in a lot of people's views, and also what the moves that they're making on the gaming front. So we think they're very well positioned to continue to drive, for them at this scale, attractive growth and really good margins. And it's one of those stocks that ends up being a core part of a portfolio, a bit of a steady compounder, if you will, you know, over the long term. But we do think there are others that you can generate better performance and better alpha over the next 12 months.
Sterling, I want to ask you about Adobe, not one of your favorites here, but one that I know that you have covered for a long time, and this move to buy Figma. We'll see if that goes through, but a lot of people hate this stock right now because of that move and aren't buying the strategic rationale, have questions about whether regulators end up allowing this to go through. But what's your thought on whether, if it does go through, and based on Shantanu Narayan's track record at Adobe, this is actually a smart purchase or no?
Yeah, strategically, I think it's a very good move, very tough for the stock near term. People didn't really understand and appreciate the acquisition of Omniture when that happened years ago, and even further back when they acquired Macromedia. But this is a defining moment in time for Adobe. When you look at what Figma actually brings to the table in terms of the collaboration, the user interface design, bringing designers and developers together, and offering the opportunity for Adobe to actually bring Creative Cloud truly into the cloud. Because a lot of what happens with Photoshop is still done on device. I think this is a very positive strategic acquisition for the long term. But yes, given the multiple that they paid, they're going to have to digest it. And we know that they know how to execute from an operational standpoint. So I do think when we look back 5, 6, 7 years from now, we're going to say that it's a smart acquisition, but at the time, very difficult.